Unmute. Hey, Janie. Janie wants to incorporate.
Where's Janie Little?
Janie Little, please put your beautiful face on.
Get out of bed, Janie.
I know. No way, I'm in my PJs with dog in lap.
Time to put
All right,
pants on.
so you do what the rest of us do. You just throw on a
Top.
sweatshirt. Just make sure we don't see anything below the waist, Janie. Anything below the waist.
That's a different class.
Yes, thank you. Not this class.
For human growth and development.
Exactly.
That's what they call it. I have an 8th grader. This was in 6th grade. Human growth. and
How to bring
development.
your HR department to
Did you
work.
get Amanda? I'll
I
call her.
text her.
No, I'll call her.
Oh, did you want me to call her?
No. Okay,
Oh, I text her. I said,
y'all
come
text
on
her.
up.
I'll call.
Starting in the agenda. Maybe she doesn't have service.
Oh, she has service.
Oh, Rusty. Hello. Haven't seen you today.
Showing property.
Okay.
All right.
Rusty, I got a bad one.
All right.
Oh, there she is.
Oh, look, she has a picture of herself in the background. How cute.
Oh, with her baby.
Aw.
Oh.
Maybe that's a picture over her bed. Maybe that's. We don't know. And there's Jim.
Oh, there's Jim. Or somebody who says they're Jim.
Right.
So now y'all have to be clean.
We'll give him another minute.
Mm-hmm.
I just figured out how to unmute. Hi, y'all.
Don, did you ride your motorcycle over?
I did not.
No, okay. Anybody motorcycle people here? Don's a big motorcycle guy.
Yeah, my first boyfriend had a motorcycle. So we used to ride all the time to
Don,
the death of my grandmother. She just knew I was gonna end up in the ditch somewhere.
did Julie have her own or did she just ride on your back?
She has her own.
Okay.
Yeah, she had
My
a-
wife has her own too.
Yeah. So we're talking about motorcycles and stuff. All right.
It's a CPA on a Harley.
Yep.
We're almost there.
Almost there.
I had a couple people that were supposed to be here and I don't see them yet, but maybe they're running a little bit late.
Real estate agents on time.
Yeah.
Better, 20 years later. You're still hopeful. I love that.
Yeah.
And that's what gets some of
It's hope.
the business.
That's right.
Because you show up on time.
Yeah.
And they go, I've interviewed 6 people and they're always late, so you got the business to show up on time.
Contractors are like that too.
Yes. Oh God, contractors.
All right. Larry, Jamie, Natasha.
And where is, hold on.
I hear some people.
Hi.
There we are. You gonna come? I've been on the phone.
You know what, Irene's not feeling well. Let's see where she is. I think she's got
There's some
some-
people checking in
Yeah.
now. Don.
What I tell you? You have 40, you will have
Yeah.
40
More than me.
on Zoom. Hey, how you feeling? Oh, I'm sorry. I'm sorry. Okay, well, feel better. We're in the class, it's about to start, and I wanted to remind you that you could hop on Zoom. But if you're feeling bad, just take care of yourself. Okay, all right. All right, see you later. Bye.
All right, we're ready to get started.
Yes.
So I'd like to introduce Don Potts. Don is stepping in front of the picture, or wherever.
There we go.
Don is my CPA. This is Barry talking for those of you out there in Zoom world. We've been working together, I don't know, for 4 or 5 years maybe. Yeah. So I asked Don to come and talk to everybody, you know, the big question for a lot of agents is always, you know, what do I do? Do I become a corporation? Do I, you know, LLC? Why do I want to do this? When do I do this? What expenses can I write off? And Don has done a wonderful job of keeping me right underneath the IRS radar and building all those great Cayman Island offshore accounts. Yes, yes. So with no further ado, I will turn it over to Don Potts and let him talk and do our class.
So I'm not sure which way I should face, but we'll do it this
You know,
way.
face the people in the room. We're the ones
Yeah.
that showed up.
That's right. Yeah, y'all get my better side right here. So just to kind of give you a little brief history, I'm a CPA. I am in private practice. I've owned my practice for 25 years. I spent time in corporate America, but this is what I do full time for a living. So from a practical perspective, you guys are independent contractors, so there's really nothing that you cannot deduct from a practical perspective. Okay, the IRS looks at ordinary and necessary. So ordinary expenses, we know, are things that you incur day-to-day operational, broker fees, the use of your cell phone, the use of your automobile, all of those things are ordinary. Necessary things, it might be you have to buy a new laptop or you have to buy a new cell phone. So, you know, anything you need to get in the mindset of first that you're running a business, even though you may not be incorporated. Okay, always have that mindset that you're running a business and keep your business activities separate from your personal activities. Do that for two reasons. One, it makes your record keeping a lot easier. And if you're ever audited, it'll be a piece of cake. Okay. So those are some of those mentalities, separating your activities, your personal from your business, even if you don't incorporate. So, you know, Barry mentioned, do I incorporate? Why should I incorporate? When should I incorporate? All of that. Most of the biggest reason people incorporate is to separate their personal business from their business activities. Okay, a liability separation. And so if someone were to sue you and you're incorporated, they have to sue the business. They have to sue you personally to prove that you were personally negligent within that business activity. So there's that separation of separation of items. Okay. From a record keeping, again, it becomes a lot more easier if you have that separation. Okay. So then the issue is, well, when do I do that? And also another reason, another why is it helps you from an audit perspective. As a sole proprietor, which you all are, if you don't incorporate and file a corporate tax return, you're filing a Schedule C with your personal return. And that has the highest risk of audit for the IRS. So Schedule C, that anybody that files Schedule C, you know, you're on their kind of hit list of being audited. So that's another good reason to file, you know, to get incorporated and file a separate corporate tax return. And when doing that? Well, what I've seen over the last 20 something years is when your gross commissions, meaning what you've received as total commissions before your expenses, gets to about the $40,000 mark. From a practical perspective, that's at that point where you can start saving money in taxes. So if you're hiring someone to help you manage that and what you're saving in taxes, that's kind of that break-even point. Okay. So right now, as a sole proprietor, all of your income, your net or all of your net income, so your total commissions less your expenses, is subject to the self-employment tax rules. Self-employment tax is Social Security and Medicare. Okay. You're never going to be able to avoid that. But incorporating and becoming an LLC and taxed as an S corp, you can kind of mitigate some of those exposures and lower that liability. Also gives you flexibility with retirement, doing some of those other type of things. Okay, so there's a lot of good benefits of incorporating and getting an LLC. So you get an LLC and then you get taxed as an S corp, and you know it's a lot longer process than staying here for 15 or 20 minutes talking about.
Hang on, can we just check the chat, just see what they're saying, just in case? I want to make sure everybody can hear you.
Can anybody hear me?
Let's see what they say.
Yes, we can hear you.
Okay,
Yes.
Okay, we'll get
Yes.
you contacted.
contact info, actually. Yeah,
Yes, I can hear you.
okay, thank you.
So I did bring, so this, and you can get this to them, I'll leave just these and you can email them or whatever. But This is kind of a checklist that I've created over the last couple of years. That helps, whether you're a real estate agent or whether you're an independent, contractor doing something else. This is kind of a checklist that I created over the last couple of years that kind of give you an idea of costs to think about when you're running your business, okay? And again, I cannot stress, think about running a business, okay? And even if you don't incorporate and get an LLC, you may want to consider getting a separate bank account. Okay, because then you've made that separation between your personal stuff and your business related stuff, and your record keeping becomes exponentially a lot easier. Okay, you're not having to run through your personal checking account and say, okay, that's not business, that's business, that's not. So you have one source to go to for all of your expenses. And same with a credit card. Taking one personal credit card and using that for business related activities. So then you're going to one or two sources, your credit card or your bank statement. It just helps make your life a lot easier, okay? And if you're not spending some time during the week to compile some of this information, you're doing yourself a disservice because you don't want to wait till December to have to compile all of your data, okay? And then figure out what your tax consequences are. I work very nice, like you said, we've been working for the last 4 years and we do stuff every quarter. We interact every quarter. From a tax perspective. Now we have interaction probably 3 or 4 times a month for other questions, and so I'm available to him as a resource for any questions or concerns or anything like that. And I'll offer that up to you guys too. I'll leave my business card and information. If you ever have a question, please feel free to email me or call me. I'll get it answered for you. I mean, that's kind of why I'm here. I want to help the small business owner keep more money in their pocket from a tax perspective. Setting up the entity is somewhat of an easy process, especially because you're not probably going to hire employees, so you just have yourself to worry about. I help clients do that all the time as well, setting up that entity and stepping through that process and what those expectations are, in the future and going down the road. Okay. But again, lowering your risk of being audited, that's always a really good thing. You want to do that, and so the LLC is that kind of first step in that line of process. Just one?
What do you see is coming, what, are there any big changes coming up in 2022? Or have there been any major changes in the last year or so with some of the tax laws?
On a given year, they always change in the tax tables. So there's always tweaks to the tax tables. 18 was the biggest change we've seen in over 30 years. And part of that mentality was to try to make the tax preparation process simpler for the common person. I don't actually think it did that. I think it actually made it more complex with the rules and everything. So for 21 and 22 going forward, there hasn't been those significant changes. Some slight changes in the tables, the rates. There's a little couple of tweaks here and there. We've got the new child tax credits that are available going forward. So if you have kids, you got to make sure that you're taking advantage of those type of things. But from a practical perspective, there hasn't been much changes going forward. I do have a newsletter here that I issue every year, so it does talk about some of the tweaks that happen for the year, and I'll leave those as well for you guys that you can have. Does anybody have any specific? Yes, sir.
No, it's just, is there a set recommendation, like when you go your commission checks that you should set aside for tax?
Yeah, so from a practical perspective, you should probably, at a minimum, putting about 20% of that away for taxes. You can push the limit depending on, how much you think you're gonna commission throughout the year to 25%, but if you're not doing at least 20%, then you're doing yourself a disservice. That generally can be very close to getting you to a break-even point, because if you're doing it on gross, you're actually taxed on net. Okay, so that it'll save you, it'll help you save for Georgia as well, that 20%. Because if you think about it, self-employment tax itself is 15.3%, right? Georgia is 5, so that automatically puts you at 20. And then federal can run anywhere between 0 and 40%, right? So, but if you're in the 10% tax bracket for federal, there's your 30%. But again, you're taxed at net, not gross. So if you're putting 20% away on gross commissions, then you're probably doing.
So by gross, you mean before the broker's fees?
No, so the broker will hand you a check and let's say it's $1,000, you take 20% of that and put it away. Yeah.
Okay, so can you say that again? Because when we do the business planning, we're always like, okay, what should we save for our taxes?
So the check that you get from the broker is already net after the broker takes their fees out. So that's your income. So that's what you should put the 20% away.
Okay, so 20%, because we usually calculate 30%.
Yeah.
So 20,
20
25.
is that floor where it'll get you really close to 0, from a tax perspective if you're doing that.
Oh,
But you do have to think about, okay, this is the first commission I've got this year. Where am I projecting? If I'm projected to make $100,000 in commissions, then you may want to start pushing that 30% limit. Okay, because the higher, remember, we have a progressive tax rate. The more you make, the higher your tax at. We do have the lowest individual tax rates in the world. Okay, mind you that. But yeah,
And
So the thing I struggle with is understanding payroll tax.
okay.
So as an S corp, are you paying yourself an income and is there tax on that?
Yeah, so I help clients, and what we do is we set up an LLC and then we make the election tax as an S corp. Okay, so when you make that election, you have to also think about yourself being an employee of your S corp. Not only you the owner, but you become the employee. Okay, and you cannot avoid paying into Social Security, Medicare. So with an S corp, what I do is we look at the income. Okay. And we split that kind of between salary and dividend, okay? So on the salary piece, you're paying Social Security, Medicare, but on the dividend piece, you're not paying that Social Security, Medicare. So that you're saving through 15.3% on that dividend. So you're getting a salary as the employee, and you're getting a dividend as the owner, okay? So that starts to save you some taxes on the self-employment tax,
And where does that kick in versus the 30%?
That's kind of all wrapped up in one big picture, so to speak. Yeah.
So 30%.
Yes, yeah, yep.
if I can just jump in for a sec, one good way to think about it is if you make $100,000 and you do a $50,000 salary and $50,000 dividend, you're gonna save $7,500 in payroll tax by splitting that. Whereas if you just pay yourself $100,000 at the end of the year, Don does his return, you're gonna pay $15,000 in payroll tax because it's 100% salary.
And so the confusing is, then where's that 50 dividend go?
It goes into your pocket, you're getting it as
Yeah.
if you
Yeah.
own stock
Stock in
in
your own company.
your own company.
Yeah.
Okay, so if you own stock in Home Depot,
Yeah.
you get a dividend check. Well, your company will pay you a dividend check for the profits of the company that's not being paid out as an expense. Part of those expenses are your salary and the related taxes.
So you'll pay income tax on that, but not payroll tax.
Yeah.
Did you pay yourself a salary each time you get a commission, or just let it sit in your account
It-
for like a year?
It really depends on most of the small business people that I work with. Some of them, we do it every month, and some of them, like with Barry, we do it every quarter.
Okay.
So you're still using those funds, but at the end of the quarter, we kind of do a summary, a wrap up and say, okay, here's I'm gonna use Barry because he's here. Here's a great example. At the end of every quarter, he sends me a little summary. It says, okay, here's my commissions, here's my expenses, and this is what I think my salary should be. So we look at income, less expenses, whatever that number is, and we say, okay, his salary is gonna be about 50% of that. And the taxes related to all of those are X. I do a summary, I do payroll tax returns. I actually transmit his payroll taxes to the government for him, and then we file payroll tax. So we're doing that every quarter.
And I never get a salary check. I don't
Yeah.
get a check every, so I'm living off of my money.
Yep.
And Don is accounting for it.
We're kind of doing it as a back door. Okay, so you're not physically getting a paycheck every quarter. You're taking the money as you need it, and we're kind of reconciling that from a tax
But how
perspective.
much do you know, like, how do you know how much to take, just the bare
You're,
minimum?
well, I take a salary every month.
Okay.
And I take a salary based on, I have a house, I have expenses, I need
Right,
food, I have
exactly,
mortgage.
right.
So I pay myself every month. Every month the business pays Arthur and Johnson. So I choose to do it that way because it just makes sense in my mind, but it's, and that's how I was told
But
to
for,
do.
I understand what you're saying, for
Yeah.
most small business owners, I refer to that as you take an advance, you're taking a draw.
Okay.
Okay, and then I look at all of that data and say, okay, this is what we're gonna do from a salary perspective. Well, you've already taken the money, but we're just
Right.
kind of backdooring
Got
it
Yeah.
from a tax perspective.
So,
Okay.
so when you're saying you're
Like
paying, so
some
does it
other
matter
rules.
to where you're paying yourself every month, just doing that direct, that deposit from your business to your personal?
Yeah, just
Yeah.
doing a transfer, a
Okay.
transfer from your business account to your personal account, right? And then, you know, part of, if you're working with me or whoever you're working with, part of that information is, here's my income, here's my expenses, here's the draws that I took.
Yeah,
Okay,
you
okay.
take
Okay, so you
draws,
can
yeah.
kind of, so that you, all the pieces, and then we look at it and say, okay, the draws, we're gonna reclassify some of those draws as salary, okay, and we're gonna do taxes based on this data.
Gotcha.
So
Okay.
you're not physically getting a paycheck, we're
Yeah.
just doing it from a paper tax perspective.
So does it matter to where, so does it matter the draws, or if you wanted to pay yourself with a pay stub, does that?
I create pay stubs for a lot of clients because they want them, even though they're not getting an actual paycheck.
Yeah, okay, because if you want to purchase or whatever.
Right, because, you know, if you're buying a home, they want to see that pay stub,
Yes,
so
they
yes,
do.
it is available,
Absolutely.
yes, sir.
So Barry does 50-50. I know some people do 40-60. There's a trigger at 40. I know the government says you have to take.
Well, the government looks at reasonable compensation,
And they think that's 40% or more.
maybe,
Maybe.
it
How much
depends.
I don't
money
do
you make.
50-50.
He doesn't do 50. A lot of clients don't do 50-50, but that's kind of that starting point. So reasonable compensation, what does that really mean? What it means is if you, in your business, were to go out and hire somebody to do your job, what would you have to pay? Okay, so that's reasonable compensation, but if your income doesn't support you paying somebody $50,000 for your job, we start at that 50 mark for reasonable compensation. Sometimes I do 40-60, sometimes I do 60-40, it really depends. I have some people that are younger that do want to pay more in Social Security, some want to pay the minimum, so that's when we do that 60-40, I'm 50-50. Sometimes we do, again, 40% salary, 60%, depending on what's going on in other areas of your life. Like if you were drawing Social Security right now and had this job, a 50-50 split wouldn't be any more beneficial to you. So we would do a 40-60 split, because we're not going to increase your Social Security that much more over the next couple of years. So that's kind of one of those things. So it's really on a case-to-case basis.
I have a question. If you have a sole proprietor and then you could you convert that to an LLC?
Well, if you don't do anything, you're automatically a sole proprietor. So then what you do is you decide on a business name, okay? You register with the Georgia Secretary of State as an LLC, okay? You get an EIN number from the IRS, and then you make the S corp election. So that's just kind of a step by
Because I
step process.
have an LLC, but I also have a sole proprietor
Okay,
and a bank account with the EIN
for your LLC.
for these are two different businesses.
Oh, so you do have a bank account and an EIN for your sole proprietor. So
Yes.
okay, that's fine. So if you were to take your sole proprietor and make it an LLC, you actually have to go through the registration process again. You can't convert your sole proprietor with your EIN to a new LLC. You have to set up a brand new one.
So could it still be the same name or? it
You
has
could,
to be- Okay, well, that's fine.
Yeah, you just have to go through the official process of registering.
Okay,
Yes. And when you do that, when you go through that process of registering with the Secretary of State and getting an EIN number, you also need to get a business license. So business licenses typically in the county of where you live, because your office is not here,
I have,
your home, you have a home office.
yes.
Everybody should have a home office.
So question
Yes.
for you. So I have an LLC, has had one for years. I did not elect to do the escort piece of it.
Okay,
So can we, how easy is that to just do that part?
it's pretty easy. There's a form that gets signed and you complete it and send it to the IRS to define when you want your S corp to start. You would generally want to make it effective for the beginning of the year.
Mhm.
So you could essentially, there is a way to backdate it to January 1st of 2021. You technically have 75 days to file the S corp election, okay? But there's a couple hoops you can jump through to make a backdate all the way to the beginning of the year. So you'd want to do it for the whole year,
Okay, so
Yeah.
you just do it January first for
2022.
2022. Okay, yeah.
Just one thing, it's
Yeah, the
important,
main office is right there at the front on the
if
left.
you are incorporating, your checks from the office have to be made to your corporation.
Yes, that's correct. They can't be made to you personally anymore. And
So-
everything has to go through a bank account with the LLC name on it and
Exactly,
all of that.
and keep in mind, like I have a corporation, no client knows what my corporation name is.
Correct.
Right, they don't, it's not, has nothing, it's Hospitality Marketing Group is my corporation. They never see that,
Right.
right? So you can name it, Teletubbies if you want to. Doesn't really matter. So don't think that's confuse that with your branding or your marketing or anything like that. That's just what the check comes to from.
Sorry. This may not be for now, but questions on how do you know what are your, like what to incorporate, like what to include as your expenses, being used having your own business, like what are the expenses? So that, this is all of it kind of thing.
I mean, it's not all of them, but it captures a good portion of them,
Okay,
but think about, okay, I went to see Mr. and Mrs. Smith and we looked at a house and I took them to lunch. Okay, well, your lunch expense is deductible, because you took them to lunch.
Yeah.
Okay, your mileage is deductible, because you are driving your car. Okay, so getting to that mindset, I'm doing something, what is the purpose of them doing? No, I heard that, new shoes, no. You have to be careful about clothing.
Yeah, and this is most of them, if you have your
like for
MRE,
expenses.
Michelle, MREA and the KW website has a chart of accounts
Okay,
for more of
Okay.
this,
Yeah.
but this is most of it.
And then last question is, if I've been paid, but they put it in my name, but I've deposited it in my business account, is that gonna mess up stuff?
no, there's ways to fix that from a tax perspective, yeah, because they're gonna issue you they're gonna issue the 1099 in your name,
Okay.
and yes, it can be done without a
So
problem.
should
but
I go change that?
You
starting
should change
now
it immediately,
To my.
yeah, LLC,
Okay.
yes.
So I track my business miles. I see you have total miles and personal miles.
So the IRS, from an audit perspective, they want to see a log, okay? And if you're logging your miles, they don't necessarily care about personal miles, but they do want to see some sort of log.
So an app's fine.
An app's fine. Yeah, the apps are great. Mile IQ is a
Mile
great
IQ.
app. Yeah.
You have to put.
What is it called?
No.
Mile IQ.
Mile IQ.
It tracks all your driving and then you just assign it business, personal, business, personal.
Right.
That's all
And then
I
you
need.
get a nice report at the end of every month.
Yeah.
It's a mile.
Mile
Mile
IQ.
IQ. Yeah, that's one of them. There's 2 or 3 of them out there.
I love
Yeah.
that.
Also with some of the, I think Mile IQ does this as well, but it gives you the ability to take pictures of your receipts and stores your
Oh,
receipts.
I don't know.
I'm not sure if that one does it, but there's a couple of them that do that.
So just, I want to get clarification. So the same thing, I'm an LLC, and what you're saying is that S corp is better than an LLC because you have more separation between,
No, you still have that separation between you and the business, whether you're an S corp or an LLC.
Okay.
The LLC is that starting point, and
Okay.
then you make an S corp election. So it's a,
Okay.
so your entity will always be an LLC,
Okay,
and that'll give you that protection.
okay,
You're making the S corp election for a tax reason.
okay.
You don't get the payroll tax benefits unless you're an S corp.
Correct.
So you can have an LLC, but you're not gonna get a tax benefit. You'll get a liability protection
Yes.
to whatever extent that will give it to you.
Oh, that was genius. Say that again.
Yeah.
I'm writing it down. You're
Okay.
so genius, am I right?
Yeah, an LLC creates the business entity and gives you some level of liability separation,
Correct.
but it does not give you any tax benefit.
Correct.
The S corporation is what gives you the payroll tax benefit.
Yep.
And that being said, I would also say at some point, and I only did this about 3 or 4 years ago, I would get an umbrella liability policy, because just because you're a corporation doesn't mean they can't sue you, and just because you're sued from a corporation doesn't mean you can't lose,
Right. Correct.
right?
Liability insurance policies are cheap.
And they're cheap.
Yeah.
And you can get $1 million policy for a couple $100 a year.
And how do you go about getting that S corp check? And what website do you go to?
There's no website. You have to file a form. The form is 2553.
Okay, just from the IRS website?
You go to the IRS website, download the PDF form 2553.
Don does all this.
Yeah, I
mean,
do that.
This
This
is all the things that he does.
Yeah. So when I meet with clients, we talk about what it is that you're trying to do? Why is it that you're trying to do? What is kind of the end game? You know, it's not thinking about today. We're thinking about 3, 4, 5, 6, 7, 10 years down the road. What is it that you're trying to do? You know, and I'm sure you guys realize this too. When you're buying a home, whether it's you or someone buying a home, brokers and mortgage people look more favorably on pay stubs and W-2
Yes.
income
Yeah.
than they do with the fact that you own a business. It doesn't matter whether you make $900,000
Yeah.
as a sole proprietor or an LLC, but if you're not doing a pay stub with W-2 income, they're like, oh, well, you know, we're gonna have problems doing this. So it kind of does make your life a little bit easier from other perspectives.
So I get a W-2 from Don every year, but it just, all this is just accounting, right? I have a big box of money that comes in at the end of the year, and I spend it and I do whatever, and Don is the one that puts it in the right drawers.
Put it on the right drawers, put
Right,
it on the
so
right
that everybody who
forms.
needs that, but I get a W-2 and I'm like, oh, I don't even, that's what I made, you know, that's my W-2 income.
Right.
I just sent, in fact, I sent him that the other day, I was, how much did I make last year? Because I don't remember looking.
And you said once you start, it makes more sense also for the S corp, once you get into like 40,000 gross.
Right,
saying,
total commissions. That's at that point where you can, with doing some of the other things and managing that, that's that kind of break even point. If you're paying for those other services, okay, and you're saving taxes, that's kind of where they offset each other. So,
Okay.
you know, if you're gonna be content making 40,000, which most real estate agents aren't, right?
Yeah.
Then you're going to that 100, 150, 200.
Right.
I've got some agents that are making $600,000 and $700,000 in commissions.
Mhm.
You know, and so when you get to that point, there's a cap on what we're, you know, at the Social Security, which is 142,000.
Mhm.
So they're not paying self-employment tax on that
Right.
or Medicare tax on that other income. Yeah. at that point.
So so what's the benefit of putting your admin assistant on payroll?
You're gonna be paying half of their Social Security and
Yeah.
Medicare. There isn't any for
Right.
you.
Well, doesn't it have to lower what I would pay if I'm paying?
It helps
Is it
lower
high?
your overall tax,
Yeah,
but you're giving someone else your money,
Yeah.
right? You're paying half of their payroll tax,
right.
you know, so. I mean, it helps them, it does probably help you too.
Yeah.
You know, you have to be careful though, because if you start thinking about like a 401k or things like that, now you have to open it up to your employees. And it can kind of limit what you can do from a dollar contribution.
And you have to start paying more money into the Georgia unemployment tax insurance
Yeah.
program. And if they file
Then you,
unemployment,
then your rate goes up.
then your rate goes up, and so there are some things you have to be aware of when you start employing people.
Okay, all right, and So 401k,
Mhm.
then I'd have to open it up to my employee.
Right.
And I don't have to open up a self-directed IRA to my employee though.
I don't think that's correct, yes. I think that's correct. I don't
Right,
think you-
right,
Self-directed IRA, you don't have to, right?
Okay.
But if you offer up a company retirement plan,
Mhm.
and that can be a 401k, or that can be a simple IRA,
No, simple.
then you still have to open it up to your
Right,
employee
right.
if you're making it a company plan.
Right, so you don't do a simple, you
Right.
do the other one.
Yep. Do
Okay.
it outside the company.
Yeah.
Yeah.
Mhm.
But that
There are
does,
ways to get.
that does limit you on what you can put into it. I mean, because IRA is capped at 7,
Yeah.
solo 401k, the max is 56,000.
Okay. Go back,
Mhm.
so per year it's 7,
So an IRA is 7
per year.
per year, solo 401k is 56,000.
Okay, well,
Can you do a solo 401 starting like your business if that's what you want to do?
Mhm.
Even on a
Put
small
$200
scale?
into it.
That's
You said
good to
what?
know.
What did you say?
You can put $200 into a solo 401k if that's all you can do.
Yeah.
And that's tax
Do you think
deductible.
that's better than doing a IRA?
Depends.
Okay, so that's more of a detailed conversation when
Yes.
you meet with.
Yes.
Okay,
Depends on what your goal is.
okay.
So one of the things, I'm just jumping in a little bit, but we're talking, as a coach, looking at is, what are your goals, right? You gotta have some vision here, right? Most people here are starting to think like, oh crap, how do I fix what I've done, right? Which is fine, and
Which
Don's
is,
great for
which is
that.
really easy to do.
Right, and then once it's fixed, but you need to be thinking about where am I going with this,
Right.
right? I will tell you, S corporations, no brainer from the start, it saves you money, even if it saves you whatever, so as soon as you get to that 40,000, if you think you're on track for that, everybody should be jumping all over that, but these IRA things and the 401ks, and I think if you're over 50, you get a bump on that.
Over 50, you get a $5,000 bump on it, so, you're.
so it goes from 7 to 12,000.
No, not on the IRA. IRA,
Okay.
you only get $1,000 bump.
But on the
401k, you
401k,
get a $5,000.
so what's the max on that now?
61,
61.
61,000.
61, now, we'd all like to be able to put $61,000 into our IRA, but the point is, you can do these things,
Right.
right, and do all of
It's
this.
starting out,
Just a
it's starting out small and and like Barry was saying, is where is it that you think you're gonna be going? Okay, because I always talk about big picture, where do you wanna be? So if you're just now starting out and you have that feeling and belief that you're gonna be there, okay, the question is, when are you gonna be there and how long is it gonna take you there? If it's gonna take you a year to get to a really good point, then do your LLC and S corp now. Be done with it. Get it set up and be done with it and work with it and do it today and go on.
The other thing I'll say is, so I've been incorporated, I think, for 15, 16 years, so, even though our income goes up and down, right, I've got 16 years of S corp tax return and personal tax returns. So, nobody's gonna question my viability as a business owner of
Correct.
doing
Right,
this,
right.
right? So that's the other thing, you all know, if you deal with business owners, they typically want 2 years of self-employment. So the sooner you get this, the sooner you'll start to establish your own worthiness for a house or for whatever else you want to do. Otherwise, even if you've been doing this for 10 years, if you don't have the self-employment returns.
I started my business, my accounting practice in 1996, and from day one, I was an S corp. So I've been an S corp for 25 years. Okay, because I knew I was going to be getting it and growing over those years. And yeah, like there's, your income's doing this, but you're still getting a lot of those benefits, even from day one.
So,
And you tie it to your checking account, and then people can
Away from the E.
Hang on.
instantly. You know what I'm saying?
No,
Janie, are you saying something, love?
No,
All right, can you mute yourself, please?
so what you're saying is that stands
sure, I'm sorry.
filed by the Form 2553, and that's I start working with you in June or March, whatever it is. You can go and but in between, I'm just doing my regular withdrawals as I have been doing. You can go backwards and print me out pay stubs. If I need it.
I can.
Okay, that's what.
I think you asked me for some pay stubs one time, didn't you?
probably not.
Okay.
I don't ever do pay stubs.
Maybe it was
Lisa.
Lisa did, yeah.
Yeah.
Okay.
So how do we make premiums like dental and medical premiums deductible? Or at least an expense?
With an S corp becomes a little bit more difficult. And so as an owner of an S corp, that has to be part of your compensation, and then they can be deductible on your personal return. So it's not a business deduction per se, but it does become a deductible item on your personal tax return. It's probably a more detailed conversation, but it is doable. I do it.
Yeah.
But you do get, ultimately, at the end of the day, you do get the deduction for it.
I have my business pay for my insurance.
And
So
then
my
I just
business
put it,
credit
it gets added back to his W-2 from a tax perspective. So it's a business
So that
deduction.
could be part of your 40 or 50% of whatever you're taking.
Yeah,
Yeah.
it is, ends up being, yeah.
Just keep it always.
So the business pays for your.
Yes,
health
every month I'm
insurance.
it's billed to my business credit card, because my business is paying for my health insurance.
Okay,
There's a
that's-
couple extra steps that you have to do, but it is ultimately at the end of the day, it becomes a
Okay,
deductible.
so.
But I just tell my clients, my escort clients, have the business pay it, and I will handle the tax.
See?
So, all right, let me back up. If you're not an S corp, can you do the same thing with that?
Yes, they're deductible on your personal return, your health insurance.
So, okay, so I have an LLC,
So have your LLC pay your corporate LLC.
pay my,
Yes.
my health insurance.
You can have it done. There's a couple extra steps you have to do, but yes,
Alright.
it's doable.
Remember, I get 2 returns from Don. Don does 2 returns. He gives me a company return and he gives me a personal return.
But everything on the corporate return
Flows.
flows to the personal
Personal
return for
return.
tax perspective. So the S corp return is an informational return only. There's no tax paid on the S corp return. It passes through, that's the terminology that IRS uses, and you pay it on your personal return. But when we're working every quarter, we're looking at all of that from a tax perspective. So when I do his corporate return and do his personal return, the goal is you owe nothing, you get nothing back. Because if you owe something, then I didn't do my job, and if you're getting something back, I still didn't do my job. Although he likes to refund.
I like to
Exactly,
refund.
that's
Because we're paying every
Because of the
quarter.
refund.
So yes, the ultimate goal is you owe nothing, you get nothing back, because if you're getting money back, it was your money to begin with, that you just didn't have access to.
So like next week, I will be sending him an email that says, here's my 4th quarter revenue, expenses, whatever. Here's what I paid in taxes this year. Do I need to make any more payments?
Right.
Right.
Because I hold higher. That's just
Yeah,
me.
he-
I mean,
he would
that's
hold
my
higher,
my little thing.
Yeah.
But, then he'll say to me, no, you're covered, you've paid enough, right? So all the money that I've set aside, it's a little Christmas present for me. I like that, right? And then he'll say, drop this into that, or drop, maybe you're a little low on Georgia, throw $500 over here. That's how I manage it done. You can do whatever you want to do, but that's the beauty of all of this. And technically, Don, tell me if I'm wrong, even though I pay quarterly, technically, you have to file a return every quarter, but you can pay everything at the end of the year,
You could, yeah.
right? So you have to file the returns, even if you owe nothing on a
So
tax.
there's no interest on what you owe quarterly?
Now, from a payroll perspective, the IRS does, if you're doing payroll, they do want you to make payroll tax payments at a minimum quarterly, okay? But you can decide, there's a couple clients that their business is pretty small right now. We've done all the payroll in the 4th quarter. Now, for the 1st, 2nd, and 3rd quarter, we filed 0 returns.
That's
Okay.
not no returns, that's a return with a 0
With a
on it.
0 on it. And we had no pay, we had basically no income, we didn't do any pay, and we do everything in the 4th quarter. You can do that, when you're small, but once you start getting bigger and generating more, I would strongly don't recommend that.
But remember, in a slow quarter, you can choose not to pay yourself a
Right.
salary. You're the business owner,
But you can still take a draw in that
but you can
quarter,
still take money, live on that money, and then at the end of the year, he'll say, well, okay, how much salary did you pay? You didn't take enough. This quarter, you're gonna have to take 60%
So we do,
or 70%.
we do a catch up.
To do a catch-up, right? There's a lot of flexibility in how this is done, particularly in the beginning when your cash flow is so up and down.
Right, it's your responsibility to manage your cash flow, but it's also my response, if I'm working with you, to help you manage that from a tax perspective. So if you came to me one quarter and said, okay, it wouldn't make any sense to do any payroll, because you didn't make any income, okay? But in the next quarter you did 10,000. Okay, so we might do a little bit, but in the last quarter you do 60,000. Okay, so in that last quarter, I'm gonna go back and look at to see what the whole year's kind of look like and say, okay, that's great, but let's do a little bit of a catch up. And this is what we did. So you're managing your cash flow and I'm helping you do that. And we're deciding on a, given basis what we're doing.
And then
You know, and anybody like me, sorry. Keep your question. Anybody that's like me from a small business perspective that you're working with should be able to help you manage those type of things. Okay, if they're unwilling to, then they're not doing their job.
And that's a key thing. I was with other CPAs before I was with Don. And you want somebody who knows our business, you want somebody who specializes in small business. Don's over here in East Cobb as well, and.
I'm a small business owner, I get it.
Right. And we actually met through a whole other situation, but yeah, you want somebody who does this kind of stuff. If you've got somebody that's just doing, W-2s and whole executives, they're not working at the level that we're working at. So think about that. That's why I recommend it.
I think the answer is just you take, let's say, the example you gave, the last quarter, you made so much money, you take that and spread it out over the year and distribute stuffs if that's what's needed.
Yes, that's okay.
You never make too much.
Right.
So what
And so with expenses, even though you can write them off or whatever, should you use your business credit card for stuff or no? Because you're gonna write it off. Like, that's where I'm
Yeah,
not
you
sure
use your
what to
business
do.
credit card.
So like,
So you're tracking all of your expenses and
So I should-
logging them. So you should have some sort of, I'll call it a bookkeeping system. It doesn't have to be QuickBooks. It doesn't have to be, it can be an Excel spreadsheet where you've got column headings, each one of these categories, office supplies, open house supplies, broker fees, and you're just dropping your dollars into those
what about like
columns.
the car stuff? Like if you have to have stuff done to a
You
car.
want to deduct your mileage. Your mileage is
yeah.
going to be your better deduction.
So
So
not,
don't keep any of your receipts for your automobile other than tracking your mileage
and not use your card for gas or anything.
and not use your card for gas. That's correct.
Oh,
No use?
of use.
Do not
Do
use.
not, do
If you're
not.
deducting
So that's
mileage,
what
you
it-
cannot
okay.
use
Oh my
your
God.
corporate card for
For
gas.
Okay.
Or if you use it, you're not gonna get the deduction. You're gonna have to.
We'll have to figure it out.
What's the mileage deduction?
So is it one or the other?
They haven't announced
Yes.
it yet. It's
Okay.
one or the
It's
other.
always
Okay.
mileage. Mileage is
So-
always
So
better.
just so I understand, so the card, your business card can be used for like your, you call them what fees? The ordinary fees
Ordinary and necessary.
and necessary.
And necessary.
So hold on, that was new information. So you're saying if you're deducting mileage, don't use your business card
To pay.
accounts to pay for the gas. Use
That's
your
correct,
personal.
because you only get one or the other.
Okay. I do one or the other. I do the mileage, but I still use my business card and the same don't. Okay.
Yeah, so if you use your business card for mileage, you have to pull that, sorry, if you use your business card for fuel, you gotta pull that fuel out as an expense and add the
Can't
mileage
double
in.
dip.
And add the mileage expense in as an adjustment.
Okay.
Oh, okay.
So if you-
Alright,
It's
so
one
that's
or
how
the
you
other.
fix-
So if
That's
you
how you
service the
fix
card,
it.
you use your personal, that will just work out in the end when you.
Yes, it's
you
on the
need to
mileage.
keep your-
It's on the mileage. So the current mileage rate is 56 cents a mile.
I see what you're saying, so all of that would contribute to all the things necessary
Yes.
to build. the
So think
car.
about
Got
this. If you drive 20,000 miles in a year,
it. Yeah,
right, you're getting about $10,000-11,000,
oh, right,
Expense.
right? You're not spending $10,000-11,000. If you are, you need a new car.
right.
Okay, I don't care, tires, brakes, the whole schmeal, new transmission, paint job, not 11 grand.
That's good.
So what do you make that gas expense as now? How do you compensate for that?
Don't use your corporate card for.
Do not use your corporate
If you,
card. How many
if
times
on
should we
your
tell
next
you? No, I'm only
tax
kidding.
return, you use
I need
mileage,
being sarcastic.
you will not be able to use it on your car.
But we can fix it.
Yeah,
You
that's what
just
I'm
said.
It's
Yeah, you can fix it.
Because
I just have
But
to.
what I'm saying is that it's still
Yeah.
on
he
your
says,
account.
It
fix
doesn't
it.
matter. I mean,
Okay,
Yeah, okay.
But
I go all
You
the-
just opened up a can of worms, yes.
Don't do it, and if you are doing it, stop.
Stop it.
Gotcha.
Okay, and it is fixable
I know we gotta.
from a
fix
tax
it.
perspective.
Okay, okay.
When it's fixable, before we pay, we can file our tax
Yes,
returns,
it's
right?
fixed,
No,
it's
after.
it's fixed on the tax return,
Okay.
yes,
It's on it.
On
it.
on the tax return,
I wrote it down, Don, let me help you. 'Cause I wrote it down.
okay,
You gotta pull that expense out,
yes.
that
You'll
is
account
your
for
gas
it.
card,
Or you'll,
and then you make an adjustment.
So let's say, for example, if you were working with me, and you gave me a spreadsheet that had all of, and I saw a column that said fuel. I would say, I'd send you an email and say, I need your mileage, and I would ignore that fuel column
Gotcha.
Okay.
from an expense perspective.
But my question is, since this is me,
Mhm.
I don't know what my accounting did, but before we filed the taxes,
Yes, that's to be
Right.
fixed before you
Uh-huh.
file the
And
tax,
then
or you
start
give
doing
him
it
the
the
tax
way.
information, yes.
Okay.
Now, keep in mind something though, if you're a listing agent, right, and you just drive to the office and it's a mile away and you don't go on driving appointments and you do 2,000 miles a year, you may want to itemize on your car expenses.
But you only get that percentage of business mileage versus.
Right, so if you drop, right, so just think about though, that, you know, it all depends. It's really, the more you drive, the better you are. It's always a percentage of your overall miles,
Yes.
right?
Yeah.
So I do about 20,000 miles a year, and about half of it
In
is
most
business.
cases, the business mileage is gonna make a difference.
But if you're sitting in an office all the time and not going anywhere, that's something you gotta think about. And that's a conversation you have again with Don, and
I'm helping you out.
I saw, I wasn't ignoring him, I was just waiting, yes.
So I'm cheap and,
You're cheap, is that what you
Yeah,
said?
I'm cheap.
You're frugal.
and there's no business cards that I can find that do zero financing for 16 months.
Yeah,
So I always use those cards,
okay,
not my business credit card, because my business credit cards, like,
So-
so
the interest on your business credit card would be a deductible expense if you were using it,
Uh-huh.
because it is a business credit card.
so it's the same as zero,
Uh-huh.
or zero would still be better.
Zero would still be better because you're not paying any interest.
Right, so why wouldn't what would be the repercussions for doing that?
Me carry balance.
Nothing.
Nothing, so I could still do that.
you can use a personal card for your business, just use it dedicated for that
For
one
just, that's all.
Yeah.
thing. It doesn't have to be.
Yeah, the IRS doesn't say you have to have a card with your business name on it. But
It just has to be the only thing.
it just has to be the only thing that you're using for business.
Well, that makes life easier, otherwise you gotta pull everything out.
Right.
Well, I mean, I thought you had to have a card.
Just,
with the
just,
business.
just go open up your business account and get the 2 cards or the 3 cards attached to it. Cause you know how you.
You
guys
get a debit card,
You get a debit card, you get a
Yeah.
credit card.
Right,
Yeah,
But
The debit, credit, and what?
and a savings account, so you can throw
Yeah.
the money for the taxes in there.
So you're saying you should
And
go
for
open
your-
up and you would
To
say
open the
for me, you
savings
should go
account,
open
you
up a
need to
new
do
account.
business
you should have a separate account for all your business activities.
Yes.
Yeah, and we started doing that on our health expenses because we were at a point where we could probably itemize our health expenses since we do have a lot. So I'm familiar with the concept, but I was just thinking, you know, I'm brand new. So like, I guess I should go ahead and open it. But you're saying you opened a checking account, bank account that gave you those?
Typically, when you open up a business bank account, they'll give you a debit card and sometimes even a credit card.
A debit card or credit card, and of course you got your savings account for your marketing expenses, your taxes or whatever if you want to roll.
Feel
So-
bad, but
we got about 10 minutes left,
Yeah.
right? So questions are great and everything. I just wanna say this, you know. There's a bunch of information here. Obviously, it's gonna be tax season soon. Don's gonna get busy. He is the guy to talk to. You should all, if you're interested in working with him, y'all should be calling him or sending him an email and getting on his calendar.
I did pass.
For this, if you have your own CPA, just ask them these questions, because if they look at you kind of cross-eyed, like they don't know what they're talking about, you don't know what you're talking about, then I would seriously think about changing CPAs. But I will give a 6-star endorsement to Don. He's awesome, accessible, easy to work with. You know, and I just don't want us to go, I know we have something else in here.
And to add to that, I'm not standing here in front of you guys looking for business. I'll be perfectly honest with you, I don't necessarily need it, okay? My goal is to educate you guys and answer whatever questions. So again, if you have a question, if you're already working with somebody and you have a question and you're not getting an answer from them and you want to shoot me an email, I'm more than happy to do that. You know, as I tell, I think Barry told me, heard me say this, there's no such thing as a stupid question except the one you don't ask. Because if you don't ask it, you're not gonna get an answer. Okay, and so that's important. You know, the other thing to remember too is ultimately, at the end of the day, whoever you're working with, it is your responsibility to make sure that that tax return is correct. Okay, so there's a lot of people I know out there that fudge returns. Okay, so you really have to be careful of drawing a line in the sand on how far you want to go with certain things. I also use the phrase, how fast do you want to go? If you're on the highway, the speed limit is 60 and you're doing 80, chances of you getting caught. The tax code's kind of the same way. There are things that you can stretch and there are things you should not be stretching. Okay. And so you just have to be really careful.
Don, I don't know if you want to, but I'm gonna throw it out here. Can you talk anything about fees or costs or how you work?
I can, yeah, from a high level perspective, if I'm setting up an LLC and doing the S corp, all that paperwork to get those things in place, it's $600. That's a flat fee. That's what I charge. Okay. If I'm working with someone that has already done a bulk of some of that stuff, then obviously it's not 600, it's a couple $100 for my time. An S corp return starts at $675 and then goes up from there depending on what other legwork I have to do with it. A personal return starts around $325 up to about $475.
So I'll tell you this.
And then monthly, what do
So
you
then
charge us monthly?
on payroll, so quarterly payroll is now $75. I'm leaving yours at the same.
Thank you.
How much was it?
$75 for
How much
quarterly.
was yours?
It's 50.
It's 50.
Oh.
He's giving me some business.
Hmm.
He's getting it. So
I love this.
quarterly payroll is $75 per quarter. Per quarter, because it's quarterly. And then the year-end payroll, which is the W-2 and other things, is another 75. So you have 75 times 5 for the payroll process.
So keep
Okay.
this in mind though, okay? Your fee is directly proportional to how much you listen to this man and you separate your stuff. So if you go out, you have one credit card and you come in with 11 pages of expenses and he has to figure out you're gonna be paying. Okay, right? What's our time worth, right? What's his time worth?
Yeah.
So the more work you do to say, this is my business return. Now, I did a class on Quicken for everybody's listening, right? I print out a report, it takes me about 8 seconds. I go through it, I mark it up, I send it to him, I send him my spreadsheets. He doesn't spend a lot of time on my business, because I spend time on my business. And then we talk about, okay, can I stretch this, can I do that, is anything happening here, right? So you can either pay for it now, or you can pay him to do it, right? The more you have it taken care of, the more you have your credit card stuff, right? The simpler it is for him, and the quicker you'll get your return. Right? And then if you got money coming back, it comes back to you. If you owe money, then you know what's going on. So keep in mind, right? Everything can be fixed for a price, right? Just like our clients, right?
So would an Excel sheet be equivalent to like his beautiful quick
Yep.
report he sends you
Yeah.
that would suffice
Yep.
for less time?
Don't use Excel.
So the tax for the tax return with S corp is
It's $675.
You see seven person.
It's $325 to
I think
$475. $325 to $475.
So if you're doing, so the man said, so because you're doing it, you have your S corp, and you're doing your personal. So if your S corp flows into your personal, so are you paying both fees or you just paying the personal? What are you doing?
You're paying both, you're paying for the corporate return, the corporate return, and you're paying for the personal return.
Okay,
Yeah, because there's other things on the personal return that wouldn't appear on the S corp return.
okay,
Like you had a spouse, their income is gonna be on the personal return. If you had interest and dividends, that's all gonna be on the personal return. If you have
Okay.
rental property, that could be on the personal.
Sid, we see you. What's your question? Please unmute yourself.
Yeah, I have a quick question, Don. Good information. Thank you. The question is, and I might have missed this, which is better for real estate agent? Is it S corp or LLC?
Well, the starting point is the LLC,
Okay.
okay? And then the S corp, you go to that for the payroll savings, the payroll tax savings. But the
Okay.
starting point is creating that LLC.
LLC. Okay, perfect. Second question is, in LLC, can we have the SEP IRA with LLC?
I believe you can, yes.
Okay, and which one is better? I mean, for your experience, is it SEP IRA better, personal IRA better?
I think they're all, once you have them in the LLC, I don't think it's actually a SEP IRA for an LLC. I think it's a SEP account. And then either solo 401k. So if you're doing those, it gives you the flexibility to do more money than just a traditional IRA. Because a traditional IRA, you're capped at 7,000.
That'd be a good question to take offline.
Yeah, probably
Okay.
question offline.
Okay.
All right,
Okay.
Amanda, can you unmute yourself there?
Yes. Hi, so I have probably made a terrible mistake and not kept up with most of my business expenses this year. And I didn't get an LLC or an S corp. And I
That's
don't,
okay.
yeah,
Kill time.
Should make an
yeah,
appointment.
Who's gonna have to pay him more?
So what you need to do is you need to go back and try to recreate your expenses.
okay,
Okay, so you probably used a credit card or your checking account or something. Just go back and recreate because 80% is better than no percent of expenses.
all right. And then,
maybe set
so
up an
is that something that I just need to bring you like, hey, here are my like printouts, here's what was business and what was not? Okay. All right, cool. I will be calling you.
Last thing I'll say is, Don, if you can, this would be another thing to just touch for a quick second. A lot of people own investment properties or are thinking about, and then they do a separate LLCs or separate things. So that's another conversation to have with Don, whether you have to have a separate one for every property, whether you have an umbrella one that's separate from the business one. Do you need to insure them separately? So for those of you that are thinking or have investments, there's more conversation to this thing, but I encourage you all to email Don and schedule appointments.
Yeah.
Is email the best way?
Yes.
Okay.
Email is the best way, he says.
What is your like first appointment with you?
The first
Just
appointment
come
is,
to your office?
the first appointment is in the office and it's a free appointment. Okay, so it's just kind of to make sure that it's a good fit from both perspectives. Understanding where you're coming from and understanding kind of my process and where I'm coming from too. So I don't charge for that initial appointment.
Okay,
So,
that's fine.
and typically they're, I typically keep them under an hour, but usually 30 to 40 minutes is the typical first appointment. Yeah, because in most cases, you're going away with a to-do list.
Don, thank you so much. There's a lot more we can cover. Maybe we can have you back in after April 15th.
After April 15th.
But thank you so much for coming in.
I appreciate it.
Leave your information.
I will do that.
Thank you.
Thanks, guys.
Thank you.
Some more of these? Those are the calendars.
Take this part.
There you go. Two gold
Yeah.
stars.
No, we're done.
I
We're
rock.
done between January.
Almost done with 2020.
We have some questions. I think so.
There's an Ignite thing.
Oh, sorry.
It's okay, I'm just gonna stand.
Gotta get you squared away, Rusty.
I don't have any 2022s.
If you have 2020, you got 2020. Thank you guys online. We appreciate you so very much.
I think it's like 40s to
Greatly appreciate y'all. Thank you.
So.
Thank you, Janie.
I cover up myself.
Good.
Set up, 'cause my husband
Good.
did that.
Everybody got some good stuff?